Hey there, future millionaires and savvy savers. Welcome to the $25 Investor, the channel where we demystify the stock market and show you how even a seemingly small amount can create a monumental impact on your financial future. Are you tired of feeling like investing is only for the super rich or that you need thousands of dollars just to get started? What if I told you that by consistently investing just $25 a week, you could build a substantial nest egg, secure your retirement, and even achieve financial independence? It sounds too good to be true, right? Well, today we're going to dive deep into one of the most reliable and consistently performing stocks out there, Costco, ticker symbol COST. We're going to break down how a modest, consistent investment in a company like Cost can meaningfully transform your financial landscape. Forget the get-rich-quick schemes. We're talking about a proven long-term strategy that leverages the power of compounding. If you've ever wondered how to make your money work harder for you, even if you're starting small, then you're in the right place. Stick around, because by the end of this video, you'll see exactly how $25 a week can turn into a powerful engine for your future wealth. Let's unlock the secrets to building a wealthy future, one $25 investment at a time. Get ready to transform your financial perspective. Let's get straight to it. Today, our focus is squarely on Costco Wholesale Corporation, universally known by its ticker symbol COST. You're probably familiar with Costco. It's that giant warehouse club where you buy everything in bulk, from groceries and electronics to tires and even gasoline. But beyond the great deals and the massive shopping carts, Costco represents an incredible investment opportunity, especially for the long-term investor. We're going to explore how committing just $25 each week to this retail giant can put you on a path to significant wealth accumulation. This isn't about day trading or trying to time the market. It's about disciplined, consistent investing in a high-quality company that has demonstrated remarkable resilience and growth over decades. So grab a pen and paper or just settle in, because we're about to show you why Cost isn't just a place to stock up on toilet paper, but also a cornerstone for your investment portfolio. We'll peel back the layers and reveal the underlying strength that makes Cost such a compelling choice for the savvy, long-term investor looking to build wealth consistently, even with a small starting capital. So what exactly is Costco Wholesale Corporation, or COST? At its core, Costco is a multinational membership-only warehouse club that provides a wide selection of merchandise. They're renowned for selling products in bulk at deeply discounted prices, attracting millions of members who pay an annual fee. This membership model is a critical differentiator and a significant reason for their consistent profitability. Why is it important? Costco has built an incredibly loyal customer base due to its value proposition. Members renew their memberships year after year because the savings and product quality are genuinely compelling. This creates a highly predictable and recurring revenue stream, which is a dream for any investor. Their business model is incredibly efficient, focusing on high sales volumes and rapid inventory turnover, which keeps costs low and margins healthy. Now, why should you consider investing in Cost? Strong membership model. As mentioned, the annual membership fee provides a stable, high-margin income regardless of economic fluctuations. Loyal customer base. Costco members are fiercely loyal. They trust the brand for quality and value, leading to high retention rates. Inflation hedge. In times of rising prices, consumers are even more incentivized to seek out value, and Costco excels at providing that. Global expansion. Costco isn't just a U.S. phenomenon. They have a significant and growing international presence, tapping into new markets. Excellent management. The company has a history of strong leadership focused on long-term growth and operational efficiency. Consistent dividend growth. Costco also pays a dividend, which has steadily increased over the years, providing investors with income. This dividend growth signifies financial health and a commitment to returning value to shareholders. Economic moat. Costco's massive scale, efficient supply chain, and membership model create a formidable economic moat, making it very difficult for competitors to replicate their success. This competitive advantage helps protect its market share. Investing in Cost isn't just buying shares in a retail store. It's investing in a robust business model with proven stability and growth. It's about putting your money into a company that thrives in various conditions, making it an excellent candidate for wealth building, even with a modest $25 weekly contribution. When evaluating any investment, it's crucial to compare its performance against a broad market benchmark. For stocks, the most common benchmark is the S&P 500, represented by ETFs like SPY. This comparison helps us understand if a particular stock is outperforming or underperforming the market as a whole. Let's look at how cost stacks up against the S&P 500 over several significant periods. First, let's consider the S&P 500 or SPY, which tracks the performance of 500 of the largest US companies. The 3-year growth rate for SPY is approximately 20%. This means if you invested in the S&P 500 3 years ago, your investment would have grown by about 20%. The 5-year growth rate for SPY is around 13.65%. The 10-year growth rate for SPY is approximately 15.72%. These are solid numbers, representing the average return of the broader market. Now let's look at Costco's performance. Cost's 3-year growth rate is an impressive 27.61%. Its 5-year growth rate is an even more remarkable 24.23%. And its 10-year growth rate stands strong at 23.06%. Let's put those side by side. 3-year SPY at 20% versus Cost at 27.61%. 5-year SPY at 13.65% versus Cost at 24.23%. 10-year SPY at 15.72% versus Cost at 23.06%. As you can clearly see, Costco has significantly outperformed the S&P 500 across all these timeframes. This isn't just a slight difference, it's a substantial outperformance that speaks volumes about Costco's consistent strength and growth. While the S&P 500 offers broad market exposure and diversification, Cost has delivered superior returns for long-term investors. This consistent outperformance is a key indicator of a high-quality stock that warrants a place in a growth-oriented portfolio. Disclaimer: before we go any further, it's incredibly important that I share a quick disclaimer with all of you. This video is for educational and informational purposes only and should not be considered financial advice. I am not a financial advisor. The examples and opinions shared in this video are based on personal research and experience. Investing involves risk, and past performance does not guarantee future results. Always do your own research or consult with a licensed financial professional before making any investment decisions. What works for one person may not work for another. And individual financial situations can vary greatly. The stock market can be volatile, and there's always a risk of losing money. This content is intended to provide a general understanding of investment concepts and how a specific stock has performed historically. It is not a recommendation to buy, sell, or hold any security. Please ensure you understand the risks involved before making any investment commitments. Your financial future is important, so make informed decisions. Let's take a moment to specifically highlight the impressive growth rates of Costco, ticker symbol COST, on its own. These numbers really underscore why Cost is often considered a fantastic long-term investment. They demonstrate a consistent ability to grow and deliver strong returns to shareholders over extended periods. Here are the key growth rates we've observed for Cost. 3 years growth rate, an impressive 27.61%. This means that over the last 3 years, on average, an investment in Cost would have grown by more than a quarter each year. This is a very robust short to medium-term performance, indicating strong recent momentum and operational efficiency. 5 years growth rate, a substantial 24.23%. Looking back half a decade, Costco has maintained an annual growth rate exceeding 24%. This speaks to its resilience and ability to perform well through various market cycles and economic conditions that might have occurred within that 5-year span. It shows sustained strength. 10 years growth rate, a powerful 23.06%. Over an entire decade, Costco has consistently delivered an average annual return of over 23%. This long-term track record is particularly compelling for investors who are looking to build wealth for retirement or other significant life goals. It's a testament to the company's fundamental strength, effective business model, and enduring appeal to consumers. These numbers are not just statistics, they represent the power of a well-managed company consistently executing its strategy and delivering value. A stock that can maintain these kinds of growth rates over multiple years, especially over a full decade, is rare and valuable. It highlights Costco's position as a market leader with a durable competitive advantage. For anyone looking to invest for the long haul, these consistent double-digit growth rates are a very encouraging sign, suggesting that your capital can grow significantly over time, even starting with small, regular contributions. Before we look at the explosive profits, we need to talk about the seed. Every great oak tree starts as an acorn, and in the world of investing, that acorn is your principal capital. Many people fail to start investing because they think $25 is nothing. They see it as a couple of coffees or a fast food meal. But on this channel, we see $25 as a financial soldier. When you commit to $25 every single week, you are building a disciplined habit that most of the population lacks. Let's look at the raw numbers of what you are actually contributing from your own pocket. In 1 year, your $25 weekly commitment adds up to $1,300. After 5 years, you've quietly tucked away $6,500. By the time you hit the 15-year mark, you've contributed $19,500. And if you stick with this for 30 years, you have personally saved $39,000. Now, $39,000 over 30 years might not sound like retirement money yet, but this is the foundation. This is the fuel for the engine. Without this consistent input, the compounding machine has nothing to work with. Look at this table on your screen. This is the roadmap of your discipline. Now, let's see what happens when that $39,000 meets the historical power of Costco. This is where your jaw might drop. We aren't just saving money in a piggy bank, we are buying a piece of a global retail giant. If you invest $25 a week into cost, your first year looks modest. You've put in $2,300, but watch the curve start to bend. By year 5, your $6,525 investment hasn't just sat there, it has grown into $10,926. You've made over $4,000 just by waiting. By year 10, the gap widens. Your total investment is $13,025, but your account balance is now $41,847. This is the inflection point. This is where your gains start making more money than your original $25 weekly deposits. Fast forward to year 20. Your total out-of-pocket is $26,025, but your account, it's sitting at $216,030. You are now playing with house money. And at the 30-year finish line, your total investment of $39,025 has transformed into a staggering $684,771. Think about that. You turned the price of a cheap lunch into over $500,000. That is why we call it the $25 investor strategy. What happens if you find a way to cut one more expense? Maybe you cancel a couple of streaming services or eat out one less time per week, and you bump that $25 up to $50 a week. By doubling your input, you aren't just doubling your result, you are supercharging the timeline of your wealth. At $50 a week, your yearly contribution is $2,600. In just 5 years, you've invested $13,050 and your money has already grown to $21,853. By year 15, while the $25 investor is celebrating $102K, you are sitting on $205,053. You've crossed the $500,000 mark. But the real millionaire moment happens at year 30. While you only invested a total of $70,050 over 3 decades, the final balance is $1,369,542. You are now a Costco millionaire, all because of $50 a week. This is the difference between a comfortable retirement and a wealthy one. Now we're entering the fast track. For those of you who are serious about retiring early or leaving a massive legacy, let's look at the $100 a week mark. This is for the Century Club investors. At $100 a week, you are investing $5,200 a year. This is roughly $433 a month. By year 10, your total invested is $52,100, but your growth has exploded to $167,288. Look at the jump to year 20. Your total capital is $104,100, but your portfolio value is $864,122. You are knocking on the door of $1 million in just 2 decades. If you have the discipline to stay for 30 years, the numbers become life-changing. Your final balance is $2,139,084. With nearly $2.8 million, you could live off the dividends alone without ever touching the principal. This is how the middle class becomes the upper class. As we scale up to $150 a week, we start to see how total wealth is built. Investing $150 weekly means you are putting $7,800 a year into cost. At the 15-year mark, you've invested $117,150. But because you chose a high-growth stock like Costco, your account is already worth $615,159. You have over $500,000 in just 15 years. By year 25, you are well past the multimillionaire mark at $2,299,310. And the 30-year total? a mind-blowing $4,108,626. The reason we show you these numbers is to prove that the gap between your investment and your profit grows exponentially. Your total investment over 30 years was only $234,150, but your profit was nearly $3.9 million. That is the reward for your patience. We are now looking at the elite level of consistency. If you alone can manage $200 a week, you are building a literal empire. At $200 a week, you contribute $10,400 per year. After just 10 years, you have $334,777. In 15 years, you are approaching the millionaire milestone with $820,212. But look at the 20-year mark. Your money has grown to $1,728,245. By year 30, the number is so large it sounds like a phone number. $5,478,169. By investing $200 a week, you aren't just planning for retirement, you are creating generational wealth that can support your children and your children's children. Our final deep dive is for the wealth architects, those investing $250 a week. This is $13,000 a year. At this level, you hit the $1 million mark in record time. By year 15, you have $1,025,265. If you continue for the full 30 years, your $390,250 investment turns into $6,847,711. Whether you start at $25 or $250, the conclusion is the same. Time in the market beats everything else. Now we are entering the territory of the elite investor. If you have the financial capacity to invest $300 a week, you are building a massive financial fortress. At $300 a week, your yearly contribution hits $15,600. In just the first 5 years, you will have invested $78,300, but your account value has already climbed to $131,119. By year 10, your money has more than tripled, reaching $502,166, $500,000 in a decade. By year 15, you are officially a millionaire, with a portfolio sitting at $1,230,319. By year 20, your investment has grown into $2,592,368. By year 25, you have nearly $4.6 million. And finally, at the 30-year finish line, your investment has transformed into a mind-blowing $8,217,253. Think about the life that $8.2 million buys you. You are no longer working for money. Your money is working for you. Whether you are at $25 or $300, consistency is the key to the kingdom. The data is clear. You don't need a windfall or a lottery ticket to get rich. You can start with $25 a week in cost, and with enough time and consistency, let the numbers do the heavy lifting for you. If you want to accelerate your journey, simply up your game to $50, $100, or more as your income grows. In our next video, we're going beyond individual stocks to explore powerhouse ETFs like QQQ, SPY, VOO, VIG, VGT, and SMH. We'll compare them head-to-head to see which one could make you the wealthiest, starting with that same 25s. If you're ready to become the $25 investor, hit that like button, subscribe, and ring the bell so you never miss a breakdown. Thanks for watching, and start investing today.